Hello traders, and welcome to a global market update, or global macro update, sorry. I spelled that wrong in the title. We're going to be covering one really key news topic for today is going to be the initial claims for the unemployment for the United States, and then going to be looking at some of the other countries that have been impacted and how they've dealt with it, and kind of looking to see if we can compare how U.S. could be looking compared to the different countries that we're going to be talking about today. But first, we're going to go quickly over the COVID-19 spread here, just looking over the numbers because obviously this is a very important subject in the global macro space right now. Total confirmed cases, we are up over 500,000 here, 523,000 cases right now. Italy is just soaring, almost beating China in the confirmed cases. U.S. is just exploding. Like, U.S. was like 5th or 6th like a week ago or less. And now they're coming up to close to being first here, which is really, really scary. And New York is just seeing the worst of it here. And the total deaths just keep on rising with almost 30,000 here. Italy almost hitting the 10K mark, which is pretty staggering in the worst of ways. Spain at 4,100, Iran at 22, and New York City 281 deaths already, which is really, really severe. Yeah, New York's definitely having by far the worst of this COVID-19 spread. Quick look at the confirmed cases, just astronomical increases every single day. Stay safe out there, wash your hands, don't touch your face, you know, the classic. I'm not going to be a health expert in any way, shape, or form, but if you follow this at all, I'm sure you know how to help yourself and how to slow the spread and how to get yourself in a position that you are going to try to help not only yourself, but a lot of other people that you are around as well. So now we're going to talk about the 3.28 million Americans that applied for unemployment benefits last week due to coronavirus. So we can see right here the numbers. The number of Americans who applied for unemployment benefits last week rocketed to a record of 3.28 million as large parts of the U.S. economy shut down and companies laid off scores of workers to cope with the coronavirus pandemic. The seasonally adjusted increase in initial job loss claims from March 15th to March 21st was the largest ever, easily crushing the previous record rise of 695,000 on October 1982. The tally in the prior week was 282,000. So it went from 282,000 people who are filing and applying for unemployment benefits to a staggering 3.28 million. So unprecedented seen amount of unemployment benefits that people are applying for. The sudden surge in claims is likely just the beginning. Waves of fresh layoffs are expected, with many states ordering non-essential businesses to close. I do agree. I think it's still the beginning. You know, with people like Trump saying that they're wanting to try to open up the economy and get people back into businesses, I understand that, yes, this is very, very damaging for any economy, but at the end of the day, you're either going to hurt your financial economics or your social economics, where people are going to be look at Italy. Like, they didn't really take it seriously until it was way too late, to a point where now it's just devastating. Like, nurses are committing suicide because they just can't handle it. They're picking and choosing who gets to live and die. Like, what do you do with all the bodies? It's super sad, and it's a very, very tough situation over there. It's not something to joke about at all. And it's not something that's non-significant. It's a very, very important topic that we're currently seeing. And I think more people need to understand that if countries don't take action in the way that they should, in a swift, quick, and pretty aggressive approach, they will see longer-term effects with massive amount of people dying, with huge influx of hospitalization, and that's obviously not good either, but a very tough situation for the governments nonetheless. What happened? We basically know exactly what, well, not exactly, but we know what happened. The flood of Americans applying for the unemployment benefits was heaviest in states suffering the most from the coronavirus, but they soared everywhere. The biggest increase was in Pennsylvania, followed by Ohio, New Jersey, Massachusetts, and California. I think there's one more here. For the big picture side of things, the U.S. labor market was arguably the strongest in half a century just a few weeks ago, but it could quickly deteriorate to recessionary levels. I agree, but also kind of not. Some analysts say the unemployment rate could climb 20% or higher if the worst case scenario comes to pass and the economy is shut down for months. Those are 1930s Great Depression level numbers. And I do agree with that. It is a very, very detrimental situation that we're seeing within the economy, but at the end of the day, you are expensing economic growth for the livelihood of the population within the economy. It's not just the older generation. Younger people are dying from it too. It's not something to be taken lightly. So I do think that aggressive measures do need to be taken to try to stop the spread. So this is the initial claims for the benefits that we were just discussing. We can see if I just move this, also this is back all the way in 1960, if I just move this slightly to the right, we can see it's relatively even in terms of what we've seen as a high all the way back from 1967 and onwards. You know, we're seeing highs of maybe 650, 700. Oh, wait, we saw maybe 620 at the peak. Maybe 660 at the peak we can see. And then back in 1982, we saw just about 700. And then, you know, what did we see? We just look at how insignificant this chart looks compared to what we're seeing right now. So, you know, a lot of people are losing their jobs, which, like, for people who are saying, oh, there's going to be a massive bounce, for one, huge corporations that were buying back their shares no longer are able to buy back their shares if they're going to get bailed out. If they're not going to get bailed out, they're not going to be able to function as a corporation anyways. So that entire side of the demand is now completely diminished. Again, we see there's over 3.2 million people who have initial unemployment claims. That's a huge part of the population now with no income other than what they're going to get from the government, which is like what, $2,000 a month or $1,000 a month or whatever it is. Which obviously, if you have that, you're not going to invest a penny of it. You need that to live, pay for food, rent. If you have a mortgage, if you have car payments, if you have whatever you're paying for, you need that money if you're kind of over leveraged and going month by month here. So in terms of the demand, I just don't see a surge of demand coming because there's so much economic downside pressure that is being applied to just the fundamentals. I just don't see it. So the rally we're having right now, I do think is a relief rally. It's short sellers taking their positions off. It is a fake out, and I think that's what's currently happening is a lot of short sellers. And you know, the market moves in cycles. It has to pull back to some degree. The market has to take a breath. It moves in waves, right? So right now, we're seeing the pullback. We're seeing the exhaustion phase after that strong push breaking support after support after support. So we'll talk about that within the SPX, but that's the job loss claims numbers, which is very staggering. And then just quickly looking at Germany and the Netherlands seem to fight off the virus better than most. And let's discuss why. Let's dig in right here. So data from Germany shows that just under 0.5% of people who tested positive for the virus have died from it in the Netherlands and Germany, which is crazy. And this is much less than the 9.5% in Italy and 4.3% in France. In the Netherlands, growth in transmission of the virus have slowed significantly. So that's crazy. 9.5% in Italy of the death rate. That's huge compared to 0.5%. So it begs a question. What did they do differently in order to get this positive result, positive outcome compared to others? Giving evidence in front of the Dutch Parliament, Jaap van Dissel, head of the Netherlands National Institute of Health, said the exponential growth of the outbreak has all in probability been brought to a halt, with the infection only being passed on at a rate of one infected person to one other person. So, if proven, this would be a significant achievement. In some countries, the average spread from one infected person has been to as many as 5 or more people, which is crazy. So, it's spreading at 5 times the rate as a country that's 1-to-1, for example. In the U.S., the state of New York had 5,146 new cases confirmed on Wednesday, and more than 30,000 tests have been positive. That's a lot, and we've already discussed how New York's really getting hit the worst out of the entire U.S. So the slow death rate in Germany has confounded experts, and it could be due to several causes. One, I don't really think is too valid, but the other one I do think is to some degree valid. The possible explanation is that doctors aggressively screened citizens who were either fit or early on in the sickness at the time they took the test, and at rate not seen in other countries, which only had the resources to test the very sick. I think this is the most important thing that they did to set themselves in the best possibility to recover in the quickest way. This has skewed the comparison with other countries because those who were fit when tested and had caught the virus were more likely to suffer from mild cases and survive. Germany was also more effective than most countries at tracking and tracing the contacts of infected patients before the spread took hold, effectively containing it better than other countries. So definitely they were quick to take action. They were aggressive when they took action. They didn't take it lightly, and they tested more people than they thought deemed quote-unquote necessary, because you see some other politicians, like Trump's like, we're only going to test people who really seem like they are sick, but on the other hand, we see Germany test really anyone, even if they look healthy, they look like they're active, if they have, even if they are fit, they already are going to test them, which is, in my opinion, a very, very important thing. And you see that in South Korea as well. And that's why their numbers have dropped so significantly for the spread, is because they're testing not just the people who are sick, but people who are not showing symptoms, because that's the people who are going to be spreading it because they feel fine, they look fine, they'll go out and do things that seem like would be normal, but then they don't know that they're a carrier, they touch things, that's how it spreads, right? So another theory, not so valid in my opinion, another more random theory is that the first German contact contracted the virus, caught it mixing with other nationalities while skiing, which suggested that they were fit and active and perhaps less likely to scum off to disease. I don't really think that's true, but the other reason I do think it's very, very valid. So that is going to be the news topics for today. The next thing we're going to be going into, I'm just going to be looking at to see if we're online. Give me one moment here. It does not seem like YouTube Live is... Okay, we're online. Okay, good. We're just making sure. Had to refresh the page. All right, so that is the news topics for today. Now getting on to the charts. We do see that the dollar is weakening. We'll talk about that. The SPX is rising probably because already talked about the shorts taking profits, and B, to some degree, there's going to be somewhat of a bullish bias to some people because of the $2.2 trillion stimulus package that passed the Senate. Since then, S&P has risen around 6.24%, pretty staggering, so that is some bullish sentiment, but at the end of the day, we'll talk about the S&P and what we could potentially see in the near future, but longer term bias, I think this is an exhaustion phase. This is a pullback to another leg down, another push to the downside, breaking supports. So that's the longer term outlook we have, but we'll get into that when we talk about the S&P. Now we're going to talk about gold before we get into the indexes and the dollar and whatnot. First look at gold. We already talked about this yesterday. We saw a squeeze in price, very, very nice descending triangle. Didn't really trade this. It was basically 4-3 in the morning, not really awake at that time. And then now we see a double top with not as much buy volume coming in the second wave here, hitting the resistance at around 1650, 1640, somewhere around there. So it's just a matter of it. We're going to come back and test here. Let's get our snip, and let's talk about potential zones that we could be hitting. So we made a strong push to the upside. We're going to have some consolidation, and we see that right here. This could be a nice consolidation for another leg up totally. I would not be surprised if that did happen, but we're still seeing that double top come into play, holding that as a nice level of support at around 1640. So it's just going sideways right now. This could just be a nice reaccumulation phase, and the next leg could be coming right now. But the fact that we did hold and did not pass today does give me a little bit more indication that there's some sell pressure within the market. But overall, we're seeing a low, a higher low, a higher low, a higher low, and a higher low. If we do come back and test this zone of support, we do have a potential entry for a long because we have a zone of confluence. We have this descending zone right here, and we also have this horizontal zone right here, creating a zone of confluence for the buyers. So if we do see a pullback here, that could be a possible entry with a stop loss because this is such a valid zone for a level of support. So if we do pass it, we're probably going to get some downside exposure, but or downside movement, maybe not exposure, but that is a potential area for an entry because we got a strong push to the upside. Overall, we do see more buy volume than sell volume, but looking at the 4-hour, strong push. This is an exhaustion, and we could see a next leg to the upside. So that's my bias for gold, but we're in consolidation. After that strong move to the upside here, we had to have some sort of market breadth. This is our market breadth. The fact that we didn't break the 1640 does to me show that we could come back and test this zone yet again right here for a nice level of support. Also, we could possibly put some, let's just see if that's going to hold. Not really. Yeah, I'm not really going to dwell on it too much more. I'm just going to see if I can draw a potential trend line here as well, connecting the highs, kind of like that. If that makes sense for the viewers, I'm connecting the lower highs, and it's kind of like a mid-range. Yeah, I think that's going to be the zone. And if we go on the day 12-hour, let's see if that's a little bit more refined. Yeah, it definitely is. So we got a nice zone of confluence here at around 1600. If the price does come back down there, that would be, in my opinion, a decent opportunity. But because we have the zone horizontally and we have the ascending zone, and we'll talk about that right here. So we got this zone, 1, 2, 3. Not super valid here, 4, 5, 6. But that I don't love, but everything else is pretty decent, so it's going to create another area of confluence for a level of support. And we also have our horizontal zone that we've known for a little while here. So it's creating our confluent level of support here on around the $1,600 zone. And we had a strong push to the upside, but we do see wicks getting left here on the top. And we got only 40 minutes left on the 12-hour candles, so it's not looking too strong in terms of where it's closing. Very well underneath this previous level of support, which is going to be the new level of resistance. Now, in that said, if this is a lower high, because this is a high, this is a high, this could still be a lower high. We could see something like this, where you're getting a high here, and then you could at least see the price maybe come down to this zone, and if it breaks, you're looking at potentially the next zone. I'm not going to assume that it is going to be instantly bullish. The US dollar is currently a little bit weaker. It's pulling back, which would be a little bit more bullish for gold and silver and potentially BTC. But in my personal view, if we are going to hold this zone, I am going to expect probably another higher low, because this is a high, this is a lower high, this is a low. We could see a higher low form, so then this massive push down and then a massive rally could end up kind of starting a triangle of some sort. So we're either possibly going to get lower highs, or we're going to get a descending zone here, and then if we break to the upside, we're going to be looking for a bullish push, or we're going to be seeing some higher lows. So this is a low, higher low, higher low. And if we also see that same thing, we could get a nice squeeze in price. But in my personal opinion, right now, the price action is at a point where I don't really have too much of an edge trading it, so I'm not going to. I like to see squeezes of either descending or ascending zones with some level of a horizontal level of confluence to some degree. We don't really see that. So I'm going to hold off and wait until we get a little bit better of a price action pattern, market structure that is able to provide me a bit more of an edge. But right now, that could be something we're interested in. Or if we come all the way back down, we don't exactly know, and then we'd be forming something like this. This would all be invalid if we do, in fact, not only test this, but if we break it, then we're going to completely change our entire view. Because if we do break this $1,700 zone right around here, we're just going to be looking for a higher low, because this is a pretty key level of resistance. Once we break it for a market structure higher high, shorts are going to basically lose confidence. Buyers are going to be coming in, especially because the US is printing a shit ton of money. It kind of sends fundamentals in terms of technicals, breaking key level of resistance with not just the US, but in terms of the central banks globally are all printing shit tons of money. So the first place people are going to be turning to if all fiat currencies are going to devalue, gold and silver. So it makes sense that it's going to be bullish, but I just have, not an assumption, but I just think there's going to be more carnage in the financial market before the dust settles. Looking at 2008, gold, silver was very, very volatile during the '08 crisis, and then from the ashes, gold and silver then broke out of very key levels of resistance and then made strong bullish pushes. But it wasn't at the first half of 2008 when markets started crumbling when gold and silver did well. It was the aftermath of the aftermath of 2008, 2009 when gold and silver really started to take off. But the first little bit of a bearish market or recession or depression or whatever is going to look like it's going to be deflationary. And I think that we're still within the deflationary period in my personal opinion. And this is going to be a potential pullback for another move, at least to the downside. I don't know if it's going to drop below the low. Ideally, forming something like this would be phenomenal, because that's going to set up for a great, great possibility for us to get a good edge in the market. But for now, that's my view, is I don't have too much edge on gold right now, so I'm going to stay a little bit patient and see what it's able to provide on the smaller term time frames. We've already talked about it. We had a little squeeze up, and we're going to see if we're going to either double top at the 1640 range, or we're going to start to climb back up and test these highs here. Then we have to assess how it's going to be looking when it's going to hit 1700. And then, like I said before, if it makes that higher high, then we've got a different view of the market that we have to have. So that is gold. Going to be going over the next pair here. Just going to go look to see if YouTube Live is all good. Okay, awesome. Yep, got that question answered. The next pair that we're going to be going over, or next pair, not pair, is the commodity, is going to be silver. Looking at the daily, we can see, actually the weekly is a better representation of what we're seeing. We see probably the most significant confluence zone that you can probably have on the weekly. We see as a descending zone connecting the lower highs. You see 6 touches, very well respected touches on the descending zone, and then the price broke that descending zone, and then we also have a horizontal zone, both at the $14 range. So for silver, in my personal view, the major supply zone is going to be around $14, maybe $15 to give it a little bit of room. There could be wicks if we're trading on smaller time frames. We've got to understand that it's a zone, not a single price area on a chart. It's a zone of, around, let's say, 1480 to 1440-ish is where I have my zones, or around $14, $14.80 to $14. But that's going to be the area that I want to see if there's going to be sell pressure within the market, because looking at the weekly, it's a very important key zone that we've identified, because we see it's such a key, important, like very easy to tell zone. Like once, if an area on a chart is so easily identifiable, there's going to be other people looking at that same zone. So it's important. Now diving into the smaller time frames, kind of going right into the 4 hour, we know that we're right within our zone. We have consolidated, forming a resistance around 1460, where we've had 3 rejections off that zone. Looking on the 1 hour, we see 1, 2, 3 rejections, and then now we're seeing a squeeze in a funnel where we're seeing higher lows coming on the 1 hour chart, and we're seeing a horizontal zone of resistance at around 1460. So looking at the chart, it's an ascending triangle pattern, but looking at the macro outlook, we see that it's right at a resistance. So on a higher probability outcome, silver looks more like a sell. It looks more like a short, because when we're looking at the weekly, it's strong bearish push to the downside. That's the impulse push. That's the push, right? And then the pullback, the exhaustion, is going to test the recently broken zone. So this is what we see on the weekly, and we're going to use that to try to understand what's happening within the 4 hour and hour time frame. So that's how we're going to be looking at the market right now. We don't see a break in the ascending triangle pattern, so there's no real actionable things to do right now other than wait. But it is looking like a pretty decent pattern here for us that we could trade on the 1 hour, which is a large enough time frame that I'm comfortable trading it. Just seeing if the extensions go anywhere. Not really. We got 1, 2, 3, and then we see a little mid-range zone that we could use as a nice area for market structure to shift as well, around 1412. Around there. So we got a couple important zones to consider, and then if we do get a nice somewhat of a reversal pattern, let's talk about what we could potentially see here now. So in my view, this is an ascending triangle, but this is also a head and shoulders. So this is our first pattern. We see an ascending triangle. If it breaks the ascending support, we're looking for a pullback, validating the previous support as a new level of resistance. Also looking for that market structure to shift. Once we see those two things, plus the VSA confirm us that we are looking at more bearish confidence, then we will look to enter. That's the ascending triangle pattern that we're going to look at. Also looking at, in confluence within this market structure, we see a potential head and shoulders. Now, this head is pretty wide. He's got like, I don't know, like a Bart Simpson head. I guess you could see kind of like that, right? So then if we break to the downside, we've tested the shoulder. So then this is the left shoulder right here. This is the head. If we get a pullback to around the, let's say, $14 zone, $14 zone and 10 cents, that will possibly form the right shoulder. Now we got a couple options for the right shoulder. We could stop at $14.10, right? That's option number one, is we halt at that zone right there to confirm the right shoulder is the same height as the left shoulder. Now if we break that, that would be the head and shoulders now invalidated, but we could still have that ascending triangle form even if we break the right shoulder, because that would still be a nice pullback, validating the previous support drawn in right here as a new level of resistance. So this guy right here was a support, and also a support right here, and it's going to be a new level of resistance. So first, if it does pull back, 14.10 possible short, and then that next one would be around 14.4. Stop loss above here would be a good opportunity in my opinion. So in terms of the possible opportunities, I'm looking at the market more short for silver because of the larger term sell pressure that we have a high probability of having around here. So that's my view of silver. Nothing really to do right now. It's opposing gold to some degree, which I don't mind too much, because if we have opposing biases on similar assets or assets in the same asset class, like if you're looking to long BNB but short BTC, that would be opposing biases on the same asset class that would have some sort of similar price action, similar to gold and silver, is you have options now. Like let's say you take a short on silver and it comes back all the way up here, and now you see a lot of bullish pressure in silver. Okay, now you can see gold, and we have a little bit more of a bullish bias on gold, so then you're able to enter gold on a little bit more of a high probability, in your opinion, move to the upside, instead of trying to, in your opinion, counter trend silver. So having the options is a really good thing if you are trading multiple instruments in the same asset class. So that is silver. Quick look at the gold and silver ratio. It is pulling back to around 107, which is ideally like where we'd like to be, because then we'd be holding this resistance. Looking at the daily, we are pulling right back to this zone, but if we do hold this area on the weekly and then is able to not only hold it, but then gain more of a support at that zone, we could inevitably see one more massive blow off top here. Potentially, but as of right now, the weekly does look like it is pulling back pretty deep into the resistance area. So if the monthly holds there, that is looking really good. But if it is going to pull back and then push further, that could just mean an even more cheaper price for silver, even more of a bargain for silver. Silver is going to be very undervalued. It already is very undervalued, and it's going to be even more undervalued in terms of the gold and silver ratio. It's the highest it's been in years and years and years and years. If you've been following, or if you can look back at the previous commodities sector. Oil, we talked about potentially breaking out. It hasn't yet because it hasn't broken above the descending trend line. So we're just going to talk about the 1 hour. We already have discussed the weekly and monthly and longer term time frames. So right now, anchor point right here, we see 1, 2, 3, 4, 5, 6, 7. Especially recently, we're really testing this zone as a strong level of resistance, which is good because if we break it, we have a high probability of shifting our bias. We were close right here, but we did not break the market structure. That's why we wait for market structure. That was the resistance that we needed to pass. We did not break it, so we did not break market structure. So in my opinion, we're still making a downtrend. We had an ascending zone right here connect the wick, which is an anchor point, and we see 1, 2, 3. So we have 4 touches of this ascending zone, creating a squeeze in the price right here. The apex was within this zone right here. The price looks like it made a move to the downside, and it's pulling back, validating the previous support as a new level of resistance. Also in confluence with our support zone that we've seen right here. Previous supports, previous resistances, turning into a new level of resistance right here. So decent amount of sell pressure and sell confluence for around the retest of the 23.20-ish range for 1 barrel of oil. Wouldn't be surprised if we pull back to test kind of these lows of $20 a barrel, but we got a massive push to the downside. This is all one bearish push, so I wouldn't be surprised if we got some level of a pullback like we saw in gold, silver, and what we're seeing right now within the SPX. But right now, we haven't broken this descending zone, so we're still looking for shorts. We're still not looking for any longs. We're still not bullish biased or pullback biased, at least I should say, until we break minimum this descending zone, and then for market structure, the horizontal zone at around 20, let's say $5, right around there. So that's my view of US oil. If it does break this zone, we could be pulling back and testing the $28 per barrel right around here. That's our first main level of supply, and then we got another main level of supply at around $34-ish. So I don't think it'll get to 35, but I think the main zone is going to be around 28, 27, where this retest is going to be ending up. But you never know. We'll see how the price reacts to that zone. So those are going to be the commodities that we're going to be going over today. Let's just keep this on silver because I think that is the most interesting chart of the bunch. And then I'll keep gold. Just slowly looking at it. And then the next couple assets that we're going to be looking at is going to be the S&P 500. We're not going to go into the weekly and monthly. We're just going to go into this the 1 hour time frame. We're going to go to the dollar index, and then we're going to end off with TVIX, an instrument that measures the volatility of the stock market of the S&P 500, and look at the opportunities that are presented within TVIX. So let's look at SPY. This is SPX 500 USD, so this is the futures. So it's going to be not having as many gaps, which I really enjoy compared to the normal SPY. I do not like gaps in the market. All right, so we broke our descending resistance, so we were expecting a change in momentum, right? We've been talking about it, and look what finally has come. So we got a bullish push initially. Well, A, because of the descending zone, and then we're now breaking market structure right here. This was a market structure in a consolidation, and now we're breaking market structure. So I think that 2,800 would not be too far off in terms of where we could go. For the pullback, look at what we had right here. This is what we're looking for. This is well, not exactly, but this is very similar to what we're wanting to find. We're getting a pullback. We see strong bullish pushes, strong bullish push, strong bullish push. People are, oh my God, it's the bottom. Look how much it's going up. It's going up 6%, 8%. Look, it's so bullish. No, in a market, it moves in waves, right? So it's not going to go from 3,400 to 2,000 without pulling back. Bitcoin dropped 50% in a single day, so I can't say never. But normal market movements, you're gonna get these waves, and you got to understand which ones are the corrective waves and which ones are the impulse waves. What we're seeing right now with the SPX, with the stock market, is, in my opinion, a corrective move to the upside. It is an exhaustion phase. It is a market breath before the next strong, aggressive push from the bears, in my opinion. And that's what we're going to be waiting for. Counter trend trading, that's totally fine. If you're contrarian, totally fine. But the next major move, in my opinion, for the S&P, if you're trading S&P futures or whatever, is going to be the next leg down, the next push to the downside, which we're going to be looking for with our three pillars. We're going to be looking for price action, market structure, and VSA. VSA, not so much. It's going to be mainly market structure and price action, but what we're looking for is a very nice continuation setup. We could see an ascending zone create some sort of wedge. We could not. We could just see an ascending support. I don't really care. I'm just looking for weakness in the price. I'm not looking for a pinpoint. I'm going to sell at as much leverage as I can at 2,800 because I have so much trust in the resistance. Hell no. I do not have any guarantees that any level will hold. Ever. There's no guarantees, right? So I have to assess how the price reacts. That's just experience. That's just being in tune with the markets, practicing every single day, gaining the experience through thousands of hours of trading. But that's what we're looking for. Not a whole lot more to talk about that, and that's going to be a great bridge to TVIX, which is going to be the volatility index. Basically, when there's very low volatility, TVIX is absolutely nothing. It goes down. It's a deflationary, decaying instrument. So you can see over time it is devaluing, it is decaying because it's a leveraged ETF. Well, I believe it's 2 times leveraged. But basically, what we're using TVIX for, we didn't get the first pump. To be completely honest, I've been talking about it for so long. Pretty upset at the fact that we didn't catch it. But we're seeing a pullback now, right? And this is perfect because we're getting a pullback when the S&P slowly climbs, inch by inch, little by little, that's good. Not a lot of volatility, contraction in the price, highs and lows for the day, kind of, making less volatility is good for TVIX because it's going to pull back to maybe 287, maybe even 200, maybe even 100. We don't exactly know. But in our view, the next major push to the downside for the SPX will have an just as great or even greater push on TVIX. So if we're getting another pullback on the SPI, on the SPY, so let's say we're going to get pullback to around 28, and let's say TVIX pulls back to around 200. Doesn't seem like it's out of reach in terms of where we're going, in terms of how long it might take in order for the pullback to actually start reverting the other way to push to the downside. But that's what we're going to be looking for, right? SPX, in my opinion, is in a pullback. TVIX is going to be dropping dramatically down, which is what we're looking for. We're looking for that next push. The risk reward on TVIX is fucking amazing. Like, let's say you're entering at 200, right? You might get some drawdown, you might not get the perfect push, but like from the drawdown you'll get there to the very low, like, yeah, you're risking maybe 50%. That seems like a staggering amount, right? But look at how much it moved from 100%. You can go up 400%. From what we had last time, we went from a $200 to $1,000, like way too quickly for most people to even fathom. In 13 days, we went up 400%. So if that risk-reward structure isn't something that's attractive for you, I have no idea what is. 8-to-1 risk-reward, that's pretty phenomenal, right? So, yeah, I don't have much more to add on it. I'm going to be keeping the Performante Premium members, in tune with it. Your audio is dreadful. Yeah, I know. I'm trying my best here in terms of having another phone that's able to provide it. TikTok's obviously not a good platform for living. We are also providing the YouTube Live as well. So if you want a better view of my monitor, go on YouTube, and we're doing that as well. So basically, that's the end of the video. We'll just quickly talk about the dollar index. We do see that it's pulling back within our major resistance zone, which was a possible level of support, but it looks like we are getting rejected off that 102.50 range. Looking back at the monthly, major level that we've seen bounce multiple times throughout history, back in 2016, back in the 1998s, back in 89, very strong level for the dollar. So we'll see right now, very significant rejection. We got a lot of volatility. Obviously, that makes sense. Huge liquidations, a lot of people trying to get in the dollar, but then also because of the mass QE, mass money printing, there's going to be lack of confidence in there as well. So a lot of stuff happening, at the beginning of the month. There was a lot of liquidations, margin calls, and a lot of people were going in the US dollar because it was very strong. Making sense, Bitcoin dropped, gold dropped, silver dropped, stocks just plummeted, like all assets basically dropped. Everyone's going to rush to the dollar, right? So at a certain point, if the QE continues, if the money printing continues, I think that we will have a drop in the US dollar because of the confidence of inflation. And it's just like, you can't increase the circulation supply of money by double in like such a short amount of time and expect it to not have an impact on investor psychology. How does that not make sense? It's crazy, but that's what we're looking for is just trying to understand what's happening while managing risk, basically. So not a whole lot more to talk about the dollar index. Looking weaker. If we do start to see a sell-off of the dollar, expect gold and silver to go up drastically. Obviously, gold and silver are your safe havens when the fiat currency system will collapse inevitably in the reset, and the major macro reset. So that's what we're looking for. You know what I mean? So that's basically the end of the DOIX. Talked about TVIX, and that is basically the global macro update completed. I will end it off for the YouTube recording, and then I will go over and look at the questions within the TikTok. So thank you very much for everyone who came in and watched, engaged with the TikTok and the YouTube. And until next time, have a good one.